Going back now to the man who back on January 19th of this year predicted here on this broadcast that it was imminent, a major stock market correction of multi-thousand points. No need to go play the clip. Many of you heard it. For the time constraints, we'll just go right to him. I may get to it after he leaves us and just tag it on. So when we post this later, people can see that. But the Federal Reserve may secretly want to sink the record-breaking stock market. That is a quote here, and that's out of thestreet.com. He was on MSNBC, CNBC talking about it. I don't know the Fed has much love for Trump, he said, adding that the Fed had the markets back during the Obama administration. Maybe the Fed would be happy to see the bear market that could be blamed on Trump. Schiff thinks the markets could easily correct 20%. That's what he said 2 weeks ago. So joining us right now is the man that predicted it. So why is this happening? You know more since last night, obviously. What's really going on?
Well, as I've been saying, and excuse my voice, I've had got a cold the other day. But hold on. Interest rates have been rising, right? The yield on the long bond has been. I got to take a drink.
It's okay. Well, you look great even if your voice is gone. We all know how it is this time of year.
I just did an interview. I don't have my voice.
I understand. Peter Schiff of Europac.com joins us.
But so interest rates have been rising. The markets have been ignoring this. And I said, look, eventually the markets can't ignore it. Why are rates going up? It's not the Fed hiking rates. It's bond prices falling. Why is that happening? It's happening because the budget deficits and the trade deficits are skyrocketing. We got a trade deficit today, December deficit, biggest in 9 years. If you take out oil, the biggest trade deficit we've ever had in 1 month as a country. I mean, trade deficits are exploding. And when the tax cuts were passed, that shined a light on the massive deficits that are going to be needed to finance these tax cuts. Plus, Trump is talking about infrastructure spending. That money has to be borrowed. They have a budget deal now they're doing. They're going to include pork barrel spending for the Democrats and the Republicans. They're throwing all fiscal discipline out the window. We are about to flood the world with treasury bonds. Who is going to buy these bonds? The Fed is saying they're not going to buy any. The Fed is saying they're actually going to sell bonds, that they're going to let their balance sheet shrink. The last time we had $1 trillion a year budget deficit, the Fed was doing $85 billion of QE a month. Now they're saying we're going to do the opposite of that. So bonds are falling, and that's going to bring down the stock market. It's going to bring down the economy, because the only thing that's been propping us up has been very cheap money, very low interest rates. You take that away and everything comes toppling down. You know, the danger for Trump is it happens while he's on the job.
Peter Schiff, it looks like what you're saying here, with a great track record of predicting things accurately and you know, raising billions for your investors, that there's two things. Trump is massively pumping money into the world economy in an attempt to turn things back on, but at the same, so that you could say is a problem historically. But then also the Federal Reserve is now changing policies where they put up with this under Obama, but they've signaled, oh, we're not going to buy any of our treasuries like we did with Obama, and we're going to raise interest rates, leaving Trump out in the cold, a true double cross.
Well, it's not that this would be positive. What the Federal Reserve did under Obama was not good for the country. We would have been much better off had we done no quantitative.
No, I understand that, but they're changing their policy for Trump, as you said. Well, then let me ask it this way. I mean, repeating and expanding on what you said last night on the street, and what you said on CNBC about the Federal Reserve having it out for the president. Please give us your take on that.
Well, when I made those comments, and they were a while back, actually, I said that I believed that had Hillary Clinton won, while Janet Yellen was the Fed chairman, I don't believe we would have got all those rate hikes. I think the Fed would have been much more cautious about raising rates when if Hillary had won. But since Trump had won, I think they went forward with those rate hikes, even though the economic data didn't support it. In fact, despite what everybody's talking about, if you look at the data, right, GDP growth last year was not strong. In fact, it's probably going to come out weaker than the average that we had in Obama's second term. Job growth in the last year is the slowest it's been since 2010. We don't really have a strong economy, but we have a lot of debt. And so now that Powell is coming in, I mean, Powell has been appointed by Trump. We'll see if he is going to give in to some political pressure, which ultimately is not good for the country. To just print money to try to paper this over is not a good thing. But I think if the Fed has to rescue the markets and rescue the economy with another round of quantitative easing, And obviously, too, it's going to embarrass Trump if the Fed has to reverse course because the economy is a mess and the stock market is tanking now that he's already claimed credit for it. But if the Fed does that again, it is not going to end well. I think it's going to cause a dollar crisis. I think it's going to cause a sovereign debt crisis. I don't think the Fed can do for Trump what it did for Obama. I think they're out of bullets. I think that next time they do QE, it's going to be a fatal overdose.
Okay, stay there, please. Let's walk through this on the other side with the head of EuroPacificCapital.com on the other side and look at the bad side of all this if he's correct. And so far, 2 weeks ago, he did call it. Peter Schiff is here with us again. I'm Alex Jones. Spread the live links. If you're listening to local radio, spread those links on local TV. Tell folks tune in, and we will drill down into this in the next segment or two. We got him on a little bit late. So you know, here's my thinking. I know they propped up the stock market and gave the elites all this free interest money and did all this for 8 years. They plunged the market, you know, right whenever the election was happening to get Obama in 2008. Schiff had predicted all that. And then I'm just wanting America to have a chance. I know China's got big bubbles. Europe has bubbles. And I get what Schiff's fundamentally saying is accurate. All I'm saying is, what is the alternative? Well, we're going to talk about that some with him in a moment. And he's right. He said this back in September, but they were re-airing it last night. Drudge had it up, so I was taking it as if he said it about last night. He was predicting it back on September 19th. So let's go ahead and play a clip from that interview that's up on Infowars.com, the full 9-minute interview. Here's about a minute and a half, and then we'll actually go to Mr. Schiff to break down what happened yesterday, what's happening now, what he sees about to happen. Here it is.
The Fed wouldn't let the market go down when Obama was president. They certainly didn't want it to go down before the election because they wanted to put Hillary Clinton into the Oval Office after Obama. So they had the markets back. There was this put. But what if the put expired with Donald Trump? I don't know if the Fed has much love for Trump. And now that Trump has put his brand on this stock market and this economy, maybe the Fed is happy to allow a bear market that can be blamed on Trump.
You're calling the Fed political, which is certainly a valid argument. A lot of people are saying that. But the Fed also had a recession in 2009 to deal with. So they needed those stimulative measures then to deal with that.
Well, I have no doubt that they will come back with the same stimulus once this recession is fully underway and blamed on President Trump, even though it's not his fault. It's simply the mess that he inherited from Obama. But the Fed did not have to do the type of economic stimulus that it did in 2009, 2010. That's why the economy never healed. That's why we're in worse trouble today than we were back then. And remember, the Federal Reserve created the housing bubble. They're the reason we had a financial crisis. It was their economic policy that began early in the Bush era. You know, when we bursted the dot.
All right, now let's go to Mr. Schiff himself. That, again, is from late last year. But it sounds like you've soured some to Trump. You're saying he's kind of jumped on the bandwagon here, and that he's basically repeating what happened before. But the Federal Reserve, it looks like, is ready to abandon him, unlike Obama.
Well, you know, first of all, just recently I was talking about an 87-style stock market crash. I in my own podcast on Friday, I said, will Black Monday come early this year? Because I was comparing this year to 1987. Because what happened in 87 is we had soaring trade deficit and budget deficits that were pushing down the dollar and up interest rates. And that led to the stock market crash. So more recently, I've been worried about a big drop in the dollar.
You called it 2 weeks ago here to interrupt. Yeah. I mean, you said a Black Monday 2 weeks ago.
But in answer to your question, I mean, what can Trump do rather than blow a bigger bubble? We can have real economic growth. He can make America great again. We can have real prosperity. That is possible. But first, we have to clean up the mess. The problem is Trump is trying to make the mess look like legitimate recovery. When he was a candidate, he was dead on accurate when he said the unemployment numbers were a myth. They were a hoax. Well, now he's perpetrating the same hoax. He was dead on accurate when he said the stock market was a bubble. It's still a bubble. It's a bigger bubble. So why can't Trump, the president, govern like Trump, the candidate? I want America to be great. But in order to do that, we can't blow another phony economy with a bubble. We need real economic growth. And so we need smaller government. Yes, I want tax cuts, but that means we need a smaller government. That means we got to cut spending. We got to eliminate departments. We got to make government smaller. Trump is making government bigger. and he's cutting taxes and trying to claim credit. You don't get credit for running bigger deficits to pay for bigger governments. If you want prosperity, we need to shrink government. We need to unleash the free market. We need to unleash capitalism. We're not doing that. We're doing the same smoke and mirror nonsense. What Trump doesn't realize is it isn't going to work now. He's not going to get out of Dodge. He's going to be a one-termer with this, and he's going to pave a way for a socialist in 2021 with both houses of Congress. They're going to blame all of this on capitalism, on the tax cuts, on deregulation. This is not what's causing it, but it's going to be what's going to get the blame. So Trump should be doing the real things that need to be done. If he's going to get blamed for something, let's get blamed for doing the right thing, because doing the right thing means some short-term pain. But you know what? We got to suck it up. You know, no pain, no gain. There's a lot to be gained if we take constructive pain, if we let this phony economy, implode so we can replace it with something lasting and something real. And I have confidence in the free market system and in Americans that if the government got out of the way, we could rebuild this country. And that's what people elected Trump to do, not to blow an even bigger bubble.
But if the economy would have imploded during a correction and then obviously come back stronger after, as historically it does, they would have been able to impeach him by now when he's trying to bring the republic back, kill political correctness. Culturally, he's doing a lot of things that are more important to me than even money. But I understand what you're saying. Getting just into the technicals then, what do you expect to happen now? You've been pretty accurate.
Well, look, I think the stock market is going to be trending lower because I think bond prices are going to keep falling. And eventually bond prices are going to crash and interest rates are going to skyrocket. The only thing that will prevent bond prices from crashing is if the stock market crashes first and the Fed comes to the rescue of the market by admitting that it's not going to keep raising rates, that it's not going to shrink its balance sheet, that it's going to launch QE4. I think the Fed has to sacrifice the dollar to prop everything up, and they may do that. There's going to be a lot of political pressure on the Fed to do just that, but that is a mistake because that is going to kill the dollar. That is going to create a crisis and ultimately a currency crisis, and what that implies for the U.S. economy, the average American, is going to be much more disruptive than a repeat financial crisis. But I think all that can happen before Trump finishes this term. So either way, it's going to be a disaster, and it's not going to be a record that he can run on 4 more years. The Democrats are going to exploit this to blame it on the Republicans, to blame it on Trump, to say, you see what happens when you cut taxes, you see what happens when you cut regulations, even though we haven't really cut that many. And even though the tax cuts don't count because we didn't cut government spending, we just substituted debt for taxation, which is a bad trade. Putting government on a credit card is a more expensive way to pay for it. But all this is going to bite us, just like Obama. Obama became president because everybody blamed the financial crisis on Bush and on capitalism and on deregulation. That's not why. But Bush stood idly by while this bubble inflated around him. And you had all these Republican talking heads who were cheerleading this phony economy. And I was on CNBC and I was on CNN and Fox saying, you guys are making a mistake by singing the praises of this bubble, because when it blows up, it's going to come back to bite us. That's exactly what happened.
Let me ask you this question then.
They don't let me on CNBC anymore, so I can't point this out.
I'm not disagreeing with you on the fundamentals here. All I'm saying is, look at the dollar, at least last time I checked an hour ago, was up. On all this certainty, aren't we kind of the best house in a bad neighborhood?
The dollar is barely up. When the market was crashing back in 2008, the dollar was soaring. The dollar index is still below 90. The dollar has barely recovered anything. So there isn't a flight to the dollar. All that's happened over the last couple of days is the dollar stopped falling. But, the dollar should be falling if people really understand what's going on, but they don't. That the markets will keep falling until the Fed cries uncle, until the Fed, takes away the rate hikes. And of course, that's what's been propping the dollar up. And the amazing thing is the dollar's been falling, even though everybody expects rate hikes, even though everybody thinks the economy is good, even though everybody thinks the Fed is going to shrink the money supply, the dollar has still been sinking. The dollar has everything going for it.
Well, let's talk timetables. And when you sit around the table with your wife and children or your business partners, what do you really expect to happen in the economy?
Look, I expect the economy to relapse back into recession. I believe we would have already been in a recession. If you look at how GDP slowed rapidly, Obama's last year of growth was very low. I think had Hillary won, we would have been in a recession in the first year. Now, the Fed might not have raised rates as many times as they did, but I think we're going there anyway. But because Trump won and the prospect of it being a game changer, it created a lot of excitement. And I think there was some spending that took place, or maybe some investment that might not otherwise have taken place. And so I think we bought some time. I think the onset.
Well, no, I agree with you. So let me ask you this as we go to break. Let me ask you this, Peter Schiff of Europac.com. Before we go to break, come back in 2 minutes and give us the answer from your perspective. I agree with all that. Why then is the Federal Reserve withdrawing its support, raising interest rates? Why is the media bad-mouthing the economy in many cases? Why are they having different policies now than they did with Obama? Just like you talked about in September, that's coming true, but now you're not wanting to defend the president as much. That's fine. I want to find out why on the other side. Newswars.com, prisonplanet.com. Spread those links. All right, final segment with Peter Schiff of Euro Pacific Capital, Europac.com. Then I'm going to open the phones up into all the other big breaking news in the next segment. Look, I like the fact that Trump's anti-political correctness says he's free market, doing a lot of good things. But it's true that this economy is a giant bubble. And now, again, as I said before the break, we see the Federal Reserve with the activities it's doing, not supporting President Trump like it did Obama. So I was just asking Mr. Schiff why he thinks that's happening and then what that will precipitate.
Well, the Fed, I said, they were dragging their feet in raising rates while Obama was president. They talked about raising rates, but at the end of the day, they barely moved them up. Now, the pace of hikes has increased since Trump was elected. But part of the reason for that, I mean, the media is not talking down the economy. If anything, they're overhyping the economy. Everybody's talking about how strong the economy is, how everything is great. Everybody is taking credit for this great economy. The Fed wants to take credit for it. Trump wants to take credit for it. So if everybody's talking about how great the economy is, the Fed doesn't have any excuse if it doesn't raise rates. How can the Fed not raise rates when they're so low if the economy is really this great? So in order to keep up the pretense that the economy is as strong as everybody thinks, the Fed is in this box where it has to raise rates. But they can't tell the truth that, well, it's really a bubble, and if we raise rates, we're going to prick it. So they're kind of in this bind, and they're still, telegraphing that they're going to raise rates 3 or 4 times this year, and that is the problem. And the market, though, is moving rates up even higher because the deficit is exploding. You see, one of the things that happened under Obama is he inherited a massive deficit from Bush. The deficit skyrocketed in 2008, 2009. And so, after a couple of years, the deficits were slowly falling while Obama was president. Now, they were falling from a very high level, but at least they were going down. All of a sudden, deficits are skyrocketing, and they're about to explode out of control. Yet we have no way to finance them. That is the problem. And so interest rates have no place to go but way up, not just a little up, but much, much higher. And how can we afford to service the debt? Where is the government going to get the money to pay the interest? Let
me ask you this then. Can Trump, if you're right, get out of this? Is there a way to get out of this? Because culturally what he's doing is great.
No, well, look, the sooner he tells the truth, the better. But of course, it's going to be hard now, given all the credit he's claimed for what's happened since he was elected, for him to now come clean and say the economy's no good. The stock market's a bubble. I think he got a lot of bad advice, and now, unfortunately, he is the fall guy. There's no way to stop this, and if the Fed under Powell tries to buy Trump some time, I don't think he's going to be able to buy enough. I think the problem is so big that the minute the Fed has to try to solve it, it's going to unleash a much bigger one.
But in fairness, you did call this 2 weeks ago. You said it was imminent. But you've been thinking this is going to implode before, though.
Well, I didn't think the stock market would, because I thought the Fed would cave. I have expected the Fed to basically backtrack. I thought the Fed was more bluffing, and they haven't shrunk the balance sheet. So I'm right there. They've been talking about it. It hasn't actually happened. But they have raised interest rates several times. They're still posturing as if they're going to keep doing it. And when I saw the big increase in long-term interest rates, based on a skyrocketing budget deficit and a skyrocketing trade deficit. I was like, okay, this is it. The market's got to tank. How could the market go up for so many days and ignore all this bad news? I mean, when you see these big increases in interest rates, when you see these deficits, you know that this is a problem.
Are you expecting it to plane out for a while and then go down the next month or so, or just keep kind of going down?
Well, right now, I think we've done a lot of technical damage. I don't think this market's just going to roar back and make new highs unless the Fed engineers it. But if the Fed's going to continue to posture as if rates are going up and they're going to shrink their balance sheet, then they're going to sell the stock market. And more importantly, they're going to sell the bond market.
I know you got to go, but we're back in 60 seconds. Let me ask you one question. How low do you think it'll go then? And then how do we come back out of that if what you're saying is true? Back in 60. The head of Euro-Pacific Capital, Europec.com, Peter Schiff, is our guest. He was on with us on the 19th 2 weeks ago and said, it's imminent. We could have, one of these collapses on Monday coming up the next few weeks. And of course, he said that a few weeks ago on his own show. So I get he's a smart guy. I've been interviewing him probably, I don't know, at least 15 years or so. And he's a respected guy. In fact, he said a lot of things they didn't want to hear, so he's kind of been banned off MSNBC and CNBC and, other channels. I guess he's on Fox Business some. But he's here, and here's where I stand. And then I want him to be able to finish up and get out of here because I know he's busy. Trump culturally going after political correctness, trying to secure our border, trying to not attack our families, take care of our veterans, the exuberance, the positivity. I like that. I get there's issues. Damned if he brings the economy down to reset it. Damned if he doesn't. It's a bubble. They blame it on him. So it's kind of like I'm a backseat driver, and we all are, other than our own positivity, our own exuberance. But I'm not in a cult at the same time. I just think, what would it be like if Hillary was in? They were coming after the free press. They already are. We'd be in a much worse world. So I just don't want to be the eternal pessimist here. But I've been sitting there every day just waiting to wake up and see the stock market drop a couple thousand points and then precipitate a downward spiral. So if you just joined us during the last segment, he was getting into, is the Fed really going to raise rates? Then it's going to start going down. If they don't, how long can that go? So just finishing up then on what you expect, depending on what the Fed does, this to look like, and some of the time frames there.
It's not just the Fed raising short-term rates. It is the market raising long-term rates. The yield on a 10-year Treasury is about 3%, right? Just under 3%. Historically, the yield averages the nominal GDP, which is, the real GDP plus the inflation rate. So if you look at where GDP is now in inflation, the yield should be 7%. Why is it 3%? We can't afford 7%. If everything is so great, why are interest rates still so low? I mean, none of it makes sense. I mean, they're low, but they can't stay here. So the market is now getting a sense of this massive supply of Treasury bonds that is going to be flooding the market. Why would you want to own these bonds? China doesn't want to own them. Japan doesn't want to own them. Americans don't have any money to buy them. We have the lowest savings rate in over 10 years. Nobody wants these Treasuries. And not only does the Treasury have to sell them, the Fed says they're going to sell theirs. So there are no real buyers. Yields have to go up. And so everything has to come crashing down. These social issues need to take a back seat. If the economy crashes, if the market crashes, if we have a worse economy than the one that Bush left Obama, then none of the other stuff matters because we're simply paving the way for somebody worse than Hillary Clinton. Not worse than that, Bernie Sanders, I think, is an honest man. He's just completely wrong. He's just a naive socialist who doesn't know anything. Hillary was just about making money for herself. But I don't want socialists taking over Washington. I don't want a wave of discontent, right? So that Sanders or somebody like him can surf into the White House. I don't want to see all these Republicans lose first in 2018 and then in 2020. Because if you're worried about these other issues, what do you think is going to happen when the Democrats have everything? And not just regular Democrats, people way to the left of any Democrat who's ever been in office, because this is going to put such a black eye on capitalism, on cutting. They're going to say, we need more government. We need more regulation. Look at how badly business screwed up the economy. We cut taxes on business, and look at the mess, right? Oh, Obama handed a perfect economy.
Well, let me bring that up. Trump is trying to unify the country. The left is trying to cause a civil war. It's in the WikiLeaks. So do they get any blame if they're able to tank all this?
I don't look. I think Trump's going to get blamed because he's already claimed credit for how great everything is. He said, because of me, the economy is booming.
But don't you get he's trying to cheerlead to prop it up and get actual jobs back? You know that.
Yeah, but that's not going to get actual jobs back, and it's not getting actual jobs back. What we need for actual jobs is we need more savings. We need more capital investment. We need to grow worker productivity. None of this is happening because we've got a gigantic government in the way, and we've got too much debt.
Sure. So what does your gut tell you? Do you think the Fed backs off and then backs Trump, or do you think that they go ahead and start raising interest rates?
Look, I think that eventually, if the economic data gives them cover, if the market goes down enough, they will be political for Trump the way they were political for Clinton. I mean, now that Powell is there, Powell is a Republican. Powell is not Janet Yellen. I didn't think Janet Yellen wanted to help Trump, but maybe Powell will. I mean, that might be why Trump appointed him. But I don't think it's going to help. I think it's going to be too little, too late. I think the economy is too bad. The bubble is too big. There's too much air. That another round of quantitative easing, cutting interest rates from 1.5% to 0 is not going to do it. There are no more bubbles to inflate. We have the biggest bubble now. We have the mother of all bubbles, and the air is going to come out of it. And I don't think Trump can get out of Dodge in time. And this is the danger. This is the political danger of where we are, and why I really wish that he had come in more forthright about the problems. Not that he caused them, but that he's going to clean up the mess. Now, people are going to claim that it's Trump's mess that needs to be cleaned up.
Well, see, his great strength is the optimism. You can also call it his Achilles heel. We'll be watching it together again.
But it's false optimism. I don't want to be optimistic that, the ice is sound, and then I go on and I fall through, right? You need to only be optimistic when it's warranted. This false optimism, you promise a lot and you deliver very little. You have so many people that expect so much, and they're going to be so disappointed. This is not going to go over well. And so a better approach would have been, a more honest explanation of the problem. And even if that meant one term, it would have been one term that was worth it. It would have been one term where we could do something good, as opposed to just be a stepping stone.
All right.
To something much worse.
Well, Peter Schiff, you're a smart guy. We'll track this as it unfolds. Thank you so much for the time.
I don't know what happened to my backdrop.
Hey, I like it. I kind of like, we've had our TVs fail before.
Space now.
We've had our TVs fail before, and it looks, and now that it says sharp, it looks even cooler when it's black back there. Hey, thanks for joining us.
Yeah. All right.